morning and welcome to the trade setup right here on BloombergQuint Live. It's, Tuesday morning, and the party for the bulls maybe comes at a bit of a pause in the morning simply because the world markets kind of came off. I mean, the US markets, when they started off, were in the positive, but somehow actually pretty early in their trading day itself, they came off. Let's get the US markets up on the screen and you'll see what I'm talking about. There is a pullback that happened there. I mean, that 192 points on the Dow. It kind of pulled the party a little bit. So we have a bit of an issue at hand, if you will, when it comes to the momentum for our markets in the session today. This wasn't the case yesterday, keep that in mind, and we did much better than what the SGX was indicating. But today, I think because of the US markets coming off, and you will see a similar trend, if not the same trend, happening in Asia as well, wherein when you just look at the early risers in trade, or actually not the early risers, now all of them have gone up. We are the only amongst the few ones which haven't started. But if you look at the entire East Asian pack and all the ones that have started trade, some have a slight issue to the morning trade in the session. So therefore, mix between the red and the green, if you will. HSI is marginally in the green or flattish. Kospi is certainly lower from where it was during the better part of the trading day today that it has had. And the SGX Nifty indicates a start, which is about, I think, 0.22 or 0.3% in the red. So we'll have a start which is slightly lower in trade. But you have to keep in mind that there could be some changes to this move that the SGX Nifty is indicating as well, if individual companies and heavyweights start performing, because we've had some heavyweights not quite performing. This is, of course, what the SGX Nifty is indicating, and about a 30-odd point in the red kind of a start. So this is how we are likely to start off. Far away from supports. Keep in mind, supports are now at 11,600, 650. We've kind of broken above a trend. Doubt that really we'll need to test those supports in the trading day today or tomorrow, but you never know. Global markets could play around. Oil, if we can just bring up, but otherwise we could simply go to trade takeaways really, or the trade setup for the day today. Because if we just look at what's happening, is that there's a bit of a rotation that is taking place, viewers, to my mind at least. So I think private banks yesterday, led by the HDFC Bank move, led the bank Nifty higher. And therefore, this up move may sustain. Today, for example, Citi's come out with a note. They have marginally raised their overweight position on financials, because I think the consensus view seems to be that the fear that was there about financials is not as large as it could have been. And therefore, maybe there is merit in trying to be overweight financials. And if that is the case, then that overweight on financials needs to be compensated by some other pockets. And which is why I think there's a bit of a sector rotation happening. Mind you, nobody notices it, but CNX Pharma is down about 4.66% from the highs. And it's rotated into the backseat of sorts. Yesterday too, almost all of the pharma names came off. Sun Pharma was at 530. That's the least performing pharma name. And that is at 480. That shaved off about 50 points, or nearly 10% from the recent highs that it has clocked in. Similarly for a Divi's Lab, which was down about 4% yesterday. So pharma has taken a bit of a backseat. And I do think today, ACC's numbers might give confidence for a short-term trade in cement stock. So ACC could do well, and we'll just get to that in a moment. But I think it will percolate into some of the other cement names as well. So you have to be mindful of that. Some numbers that we should be watching out for today. There are a bunch of them. I've chosen the ones which I think are the most important ones. So HUL on the Nifty 50 side. And boy, we need HUL to do well after Britannia's small fiasco, if you will. And Granules, IEX, and Hindustan Zinc from the broader end of the spectrum are all important ones. If Granules puts up its hand and delivers a good number, the expectation is, I think, about 110, 115 odd crores. If it does better than that, then you might have, well, a bit of a party for API players. IEX is caught in the eye of a storm, especially on the sell side, with people giving targets of 150 also, and people giving targets of 255 also. And similarly for Hindustan Zinc, it becomes so important in light of what happened with Vedanta that it'll be an interesting number to be watched out for. Any kind of dividend announcement, if at all, could be all interesting. What about stocks to watch in the session today? So I think the stock of the day, to my mind, is Associated Cement Companies, or ACC. That will probably stand out in the trading session today. So what did the numbers look like for Q3 CY20? Well, revenues were at 3537 crores. The estimates were 3444 crores. So that's flattish because the volume picture also was very, very flattish. I'll get to that. But the net profit beat estimates handsomely, over 10% beat, actually about a 15-16% beat on the net profit. And margins too, estimated 17%, 17.1%. They came in at about 19% due to lower power and fuel expenses. Now, what are the key pointers for ACC? That's the key thing. So if you look at the numbers, the sales volume beat estimates. And estimates was 6.43. The actual number was 6.44. They came in with a number of 6.49. So no dramatic beat there. So volumes were flattish, but the realizations rose about 3.5%. The estimated realization uptick was 1.4, and the EBITDA per ton on a quarter-on-quarter basis at about 1,073 versus 1,173 in Q2 CY20 sequentially. So the EBITDA per ton came off. RMX mix was a bit of an issue, but realizations did much better than estimated. Sales volume better. The management commentary confident about that time ahead, and all of that portends well to my mind. So, forget what I think as well. Brokerages have put their hand out and said that they would prefer ACC. Citi, I'm using just one example. Citi, for example, says they've raised the target price to 2,075, and ACC is now the top pick in the cement space along with Ultratech for Citi. So that tells you a story, doesn't it? So do watch out. ACC could well be, to my mind, the stock of the day. The other one that I thought did reasonably well for itself was HDFC Life. Well, it was expected to do well, and it did well because, the monthly releases come out, right? So most people knew what the quarter would look like. But the gross premium uptick of 35% is a really commendable performance from HDFC Life. The 13-month persistency ratio stood at 91%. This was amongst the best 13-month persistencies that HDFC Life has clocked in, or probably any other life insurance companies clocked in as well. So really good going. The premiums improved due to strong growth in the individual businesses, and the company market share improved to 17.5%. I think about between 250 to 300 basis points improvement in market share. So not only have they shown a balanced growth, except for ULIPs, which are weak, but as a result of that, their market share has gone up. Now, market share is very fickle, viewers. Keep that in mind. But I think it deserves a look at, simply because in these trying times, if a company by digital modes can actually take up its market share, and it should augur well for the next couple of quarters too. So I'll watch out for HDFC Life. It's actually a stock that's come off a bit from its recent highs in the last 4 or 5 months, despite the fact that insurance as a business has done well. Maybe there could be some merit here. Britannia, maybe a bit of a disappointment, really, because the domestic volume growth came at about 9% versus estimates of 11 to 12%. The consensus estimates were about 11 to 12%. The volume growth is at 9%. That's much lower than what was anticipated. Now, the actual numbers, revenue at 3419 crores, the estimates were 3562. Net profit 494, estimates were 503. EBITDA and margins did okay. Most companies are doing well on the margin front, right? So on the EBITDA front, 675, the expectations were 669. So actually it's a mistake at our end. The actual number is better than estimated, but which is fine, because the margin number at 19.8% versus 18.8% is actually a much better performance. So on cost control front, really good. I think what will disappoint the street is the domestic volume growth. The stock has been flattish, so it's not that it's run up ahead of the numbers, and therefore I don't know how much downside really. It's a very strong stock, really. Dips get bought into, but maybe there could be a bit of a dip. Let's wait and watch. Some others, Tata Metallics, I thought came out with a very robust set of numbers. EBITDA up 2.7 times, margins at 21% versus 8%, net profit up 3.5x versus 82.2. And yes, there was a deferred tax reversal, which aided bottom line, but still, I think just the EBITDA and the margin number is so strong that I think the street would reward this one. So maybe this is the other one that could have been a stock of the day. Just that it's a smaller stock, so I've chosen ACC. But do watch out for Tata Metallics. Do watch out for these names as well. Tata Communications, very strong numbers, fine organic, very strong performance yesterday. So both of these should be in focus. And Divi's Lab, weak performance, so should be in focus. And I will specifically watch out for IRCTC. I think there's some report in one of the day online portals about railways might remove pantry cars from all trains and replace them with coaches. So the problem is that IRCTC, which handles the railway catering, could have take a hit on its revenue. And I think we are not sure of the veracity of this, and therefore I'm not putting it out. But if the stock corrects a bit, you know why it would have corrected in the session. So watch out for this. Last but not the least, on this very extended trade setup, I want to leave you with a tweet that Bill Gates put out, and think about whether that makes you ponder over an investment case. I'm not saying anything else, but Prime Minister Modi was speaking at the Grand Challenges annual meeting, and Bill Gates and nobody else mentioned that India's research and manufacturing capacity are critical for fighting COVID-19. And there are a few companies, I mean, we know the pharma companies and the API drug manufacturers and the others, but the contract research firms could also be very, very interesting. So do watch out for that pocket. Could be an interesting one to look at. Thanks so much for tuning into the Trade Setup today.